Hello everybody, I hope that you are doing very well and welcome to tonight's Contenders live stream, the 4th of September 2019. It's going to be a very good one. This is the one that we were planned for last week, obviously, and then we went into live trading in the end. So yeah, I'm really looking forward to tonight's stream. We are going through parallel channels. Honestly, one of my, if not the most, but up there in my top 3 technical analysis tools. Of that, I daily use them. Okay, so parallel channels for me are such an integral part of my trading. Literally top 3 for me. So yeah, I'm really looking forward to tonight's stream of going through them. And what is just absolutely perfect, the crypto gods, trading gods, were with me today, and what they've given us today is a perfectly traded parallel channel, just for a very nice live example of how Bitcoin's trading. So yeah, this is what we'll be covering shortly, but this today has just traded absolutely perfectly. So yeah, that's a nice example that we can go through in a minute, or well, probably nearer the end of the stream I'll go through the live example, cover the information first. But yeah, today's going to be good basically, and thank you for that nice example too. And yeah, so today basically I want to start off with Engine Coin chart of the week, which feels like a long time ago now. I gave out this chart of the week, but this is for me still the #1 altcoin to be trading right now. Literally, Engine Coin has been the best performing altcoin of the past 2 weeks. Okay, so since I gave this original one out 2 weeks ago, it's since featured in a champions chart of the week, which is like a signal call basically. So we've done the champions chart of the week, and now we're going back to the original setup of Trade of the Week, which I want to just cover. I'm going to go through it quite swiftly, okay? But nevertheless, it's actually still ongoing, so this is still relevant. But yeah, it's being #1, okay? And then moving on, obviously, to today's stream, which is the trading of parallel channels. I'm going to have to split this into 2 parts, and it could actually end up being a 3-part. There is just so much for me to cover. So today is going to be more of an introduction and the core basics. So by the end of this stream, you will be able to trade them. Part 2, okay, which will obviously be next week, I'm going to go over some more advanced features of parallel channels, of how you can look to predict when one's forming, how to just some more advanced features of basically of parallel channels. But yeah, this I imagine is going to be like 3 hours at least of content, so I'm having to split it into parts. It's too much for one go. Okay, it's information overload, I think. So yeah, today part 1, okay, next week will be part 2, and then if I cannot fit it all into part 2, there will be a 3rd part, okay, it's just so much to go through here, okay, so yeah, hope that you're looking forward to this. Can't watch either. Let me just make sure there is, refresh Alex, okay, cool, I think people are okay, the majority. Got my ticket booked, yes, everybody's very positive, yes, that's what I like to see. I have no idea if people are apparently having lag on this stream. Let me just, before I start, for me it looks fine. I'm going to have to continue. And if there's a problem, I will, it's going to be recorded obviously, and you can watch it back later. But I hope that it looks like the majority are okay, and just a few people with problems. And I would have to say it's likely your internet, because for me the stream looks okay. But yeah, I'm going to continue, and obviously, unfortunate if it's lagging for you right now. But try reboot your router, I guess, and yeah, you can always watch it back another time later. I would always recommend, once you've watched it now live, watch it back a few times anyway. But moving on, I'm going to have to move on just because I'm already strapped for time. So yeah, let's begin with Engine Coin chart of the week. Okay, so this was a very, very nice trade. I have to say, it was absolutely wonderful. So it basically was a long entry from 646 sats. I'll go through all of the confluence that we had in a second, and just how strong this has been. Okay, so we had strong horizontal support, and oh my, this is an understatement. Okay, strong horizontal support. This has had three major tests and held each time. So yes, very strong horizontal support. Okay, overall 0 Fibonacci. The low to high of the current wave structure was in the golden pocket, and 786 of the smallest wave. So we had 3 layers of Fibonacci confluence and a strong horizontal support. Okay, so equaling strong confluence, and we can see that in the bounces that I'm going to go through. Okay, stop loss placed just below the lows at 631 sats. Okay, tight stop loss, as I believe if this low is hold, then basically the setup's invalidated. literally for this setup, what I first gave myself was just a 2% stop loss, and it's stop loss below the wick. Okay, so that was the wick. Okay, which obviously we ran into this order block here, but that was the wick to essentially hold us up overall. And then I was looking at this strong horizontal level. Okay, and yeah, take profit 690 was take profit 1, targeting the daily. Let's go over to this chart a second and just admire this chart a second. So this was the original setup. Let's come out to the 4 hour here. Okay, so we can see that this is still ongoing. Okay, so there's still no invalidation of this right now, but this was the original setup. Okay, just inside this box what I was playing. Okay, so it's very simply a long from our horizontals, and just let me show you the horizontal that we're seeing here. Okay, so it was obviously a resistance, 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 resistance. What does all of that resistance do? Okay, all of that resistance, what does it do once broken up? It flips into support. So what we can see there perfectly is old resistance flipping into support. Okay, that was obviously holding price down for a total of 17 days. So what I also really liked about this resistance, trying to find it now, was that it was very looking like obviously the top of a ascending triangle. Okay, so we obviously had here a pretty nice ascending triangle, touch, 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 broken. So another confluence that when you break, okay, of a ascending triangle, you obviously here are just retesting the top of an old ascending triangle, which flips as support. So it wasn't just horizontals, it was a pattern as well. So e.g. that was just a major support. Okay, so that's why we can see it's had 1, 2, 3 okay, touches of support and held each time. But yeah, originally, what was I looking at here? We also had going on the downward sloping trend line, okay, which was touch, 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 what was a rejection, and then you have like the trend line going back to trend lines. You know, it continues on through price action, and you can see how relevant it really was here. When we see on the chart resistance, resistance, support, support, broken, support, 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 broke down, support, 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 and then look, that led off this major run up to the weekly, okay, was you had the confluence here of the trend line and that horizontal. Okay, so that was another setup that was basically given to us here. Okay, and that was like the confluence of both of those areas, and obviously previous fibs. So this gave me in the end 3 trades off of the same line. Okay, first trade I exited out totally at profit, so that was a very nice first trade, and then I was given the opportunity here, so I did take another trade off of this trend line, which was stopped out. So I did have a very nice winning trade. I then had a, well, for me, it was about a 1% loss because I didn't trail my stops. I should have, but I didn't trail my stops. So I had about a 14% win, 1% loss. Then I entered here on this trend, and then I compounded when we got to here, and then, you know, it was kind of off to the races. It came back up to daily, and this is where I gave a champions trade of the week. So this was where I done my signal call of Engine Coin. Okay, we were aiming up for the weekly here, stops below the low, and what we say was take profit 1 the daily. We come up to take profit 1 the daily, hit take profit 1, got a retracement, and got within 1% of the weekly, less than 1% of this weekly. Okay, less than 1% of the weekly, or about 1% anyway, and obviously fell down, and we ended with a shooting star candle here, and then you get your bearish market structure of low, lower, high, lower, low. I was then stopped here, and then obviously the move is given it all pretty much back. But what we can notice here is, why are we finding support? Obviously resistance again flipped to support, and it had another move up. Okay, so I still am in Engine Coin right now. Obviously this is then a separate trade in itself, but I'm still in Engine Coin, and I have personally got my stops below the daily. Okay, so my stops are below this daily, and target for me again will be taking profit at this daily level and the top of the weekly. But the way the altcoin market is right now, I'll happily have my stop here in profit, and if it gets stopped out, probably won't take another trade on Engine Coin, just because the way that I view the altcoin market right now, with Bitcoin at such a pivotal level, it's decreasing the my view on altcoins, and I'll cover Bitcoin in detail at the end of today's stream. But yeah, that was basically Engine Coin. I'm sorry that I've gone through it quite rapidly today. I'm just really aware of the time. So yeah, that was basically the setup on Engine Coin, and to be honest, it literally was perfect. You know, the original trade, which was obviously trade of the week, you know, that couldn't have gone any better. If we're honest, that couldn't have gone any better. And then to be given the opportunity of a second trade off of the exact same level was just perfect. And then when we had the confluence of the trend line again, with that downward sloping trend line for another trade entry, that was just like 3 trades. Perfect. And then this one obviously in the end performed better than the original trade because it hit the daily, hit second daily, got within 1% of the weekly, then stopped in profits. So that was a really nice trade. And again here on this entry, it was again looking up for this daily profit target. Okay. But now that's trailed. So that's Engine Coin basically. And now I want to move on. Okay, to this one. So this was what I wrote last week. First take profit was hit at 690. We got the retracement, and that retracement actually came back down to the parallel channel, by the way. So it came up back to the trend line. Okay, so we hit 690, come back, and then we got our move up. So little move up like that. Back in the groove this week with Volts, a perfect entry, stop loss placement, and target on Engine Coin. And then obviously, since then we have seen expansion on. Okay, original trade set up, target hit perfectly, retraced back to the original entry, which held as support again, strong support level before taking off. The secondary bounce I gave as a trade of the week to the champions, where I gave the target, stop loss, and everything for that daily and weekly levels. So that was profitable for everyone too. And moving on. Enough of Engine Coin. Moving on to the main show today, which is going to be parallel channels. Okay, so let me firstly just say why I love trading parallel channels so much. Okay, you've heard me say many times. Okay, do not trade your bias, but only trade the chart that's given to you. Okay, and for me, parallel channels are a very, very good way of having no bias on the chart. So when people, like today, there was a question asked of how can I remove my bias from a chart? Okay, they were looking at a chart, looking at the same chart as me, but had just a very bearish bias of unable to look at it anything but bearishly. And I hope that this will help everybody out in the same way of using parallel channels can remove biases, because if you are trading a range, the top of the range you look too long. That was a bad start. The top of the range you look to short, and the bottom of the range you look to long. Okay, and as I've tried to do here in like a fake example, you have to remember nothing is going to perfectly hit the exact top of the range just like this. You see deviations. Okay, so this is a deviation from the range to high. This would be a deviation from the range to low. I'll cover that in more detail as we move along, but to see when it's never going to hit the exact level. Okay, you see deviations to the up or downside, or what's known as a partial rise or a partial decline. Okay, but those are concepts which I will cover as we move on. Okay, but that's obviously how I love parallel channels so much, because they remove a lot of biases of what I want to happen, and I will just trade what is happening on the chart. Okay, so a rundown of a parallel channel. Okay, so there should be at least 4 touches. Okay, so this would be 2 on the bottom and 2 on the top. Once you have those 4 touches, then you have already formed a parallel channel or a range, and that's where you would look to continue the range until obviously you break. Okay, as with everything, there will, say as you're trading this along and you come along for touch, at one point you're going to obviously lose a trade when the channel breaks. So let's say that you took a long at the bottom of this channel and then it breaks down. Obviously it has to be really, really acknowledged that one of your trades is going to lose, okay? Because that will be the losing trade that gets the continuation from the parallel channel, okay? So at some point, you're going to get stopped out, and then that's when you then trade in the direction of the break, okay? So I hope that makes sense. But I'm going to go through some examples to really cement this idea. But technically the pattern should be viewed as neutral, okay? Because you are in this point in a range, okay? So although I've wrote here, it can be viewed as neutral, where you would look at this with no bias. What you can say is if you are breaking from the downside, so you're going from a high to low, and then you form a channel, you could favor a break to the downside, okay? So if you had to say, we could say it's 60-40, likely to break down, okay? And that's just following a simple rule of continuation. If you're coming from a high down to the low and you consolidate, what do you expect? Kind of like a bear flag, isn't it? So it'd be like viewed as a bear flag for a move to the downside. Okay, I would say view it neutral and trade it neutral, but you would just overall expect it to continue. Okay, obviously not 100% of them continue, but you would say generally you're going to see continuation in the form of a flag, okay? So that's just a little note, okay? And really important that when you break out of the parallel channel, you do want to see an increase in volume on the breakout, okay? So how can you tell? This is a little tip. How can you tell when it's going to be a deviation from the up or downside? It's when the break is on low volume, okay? And then you generally will see the break on low volume, oops, you'll see the break on low volume and then come back in and reclaim the level, okay? And then that would be your long once you've come back into the level. Again here, you would break up from the top of the channel, generally on low volume, and then as you come back inside of the channel, that's your short entry, okay? So yeah, that's a little tip on how you can tell if it's a deviation or a breakout, because you would expect the real breakout when it comes to be on an increase in volume. Okay, so the volume is a really key metric that you should be looking at when you're trading channels. Okay. And generally speaking as well, you will see as you move along in the channel a decline in volume. Okay, so that's not all the time, but generally you will see a decline in volume until the break, and then when you break, you will see then the increase upon the breakout. So it's very similar to flags, isn't it? So in that regards, okay. So for targets of a channel, okay, and I want to go through two ways that you can get targets. The first is the most basic way, which is in this screenshot here. Okay, so this is the most basic way of getting targets, and that's simply like this: the high of the channel to the low of the channel, take a measured move to the downside break or the upside break, whichever way it breaks out, and your target, okay, would be an exact one-to-one measured move. So the range of the channel move to the break, that is your measured move target of a rectangle slash parallel channel trading. Okay, I generally never really am looking for a one-to-one of the channel. I will always go off of horizontals, what makes the most sense. Okay, if for example you've just seen an extreme move, it's all really about context, but you can use this as a guideline. Okay, so the guideline would be a one-to-one. Okay, but really you'd be looking left horizontally. For example, have you got a Fibonacci extension in here, some other tools, but just for a guideline, you're looking for a one-to-one extension. But I personally would always refer to the price, not just taking a random one-to-one extension. Okay, always look what would make the most sense, where's the most likely place to find your next area of support or resistance. Okay, so in this example, obviously we are shorting the top of the parallel channel with a partial rise. So partial rise, I've got a full explanation of this later, but just for the sake, partial rise is just when you do not reach the top, okay, of the channel, and obviously the flip is when you do not reach the bottom. That's a partial decline. Again, you can hint here that this move is going to break to the downside. If you do not reach the top, then that's showing a sign of weakness. Okay, same if you don't reach the bottom, that's showing a sign of strength. Okay, so moving on. So obviously, the way I think actually I explained this better in my next one, but what we look to do is you would look to long the bottom of the channel, take profits in the middle, close at the top. Obviously then when you close, you take profits in the middle, long the bottom, and the middle line, okay, is going to be a take profit region. I want to go through this in more detail on the next slide, but just so you're aware, the middle line of the channel is a take profit region. Okay, moving on. Okay, so day trading channels, and there's going to be a difference between day trading channels and swing trading channels on the large time frames. Okay, so when I'm day trading channels, okay, I will generally trade a channel from the bottom to top or top to bottom with a take profit set in the midpoint of the channel. Okay, so I personally like to take 50% profits at the midpoint, okay, and then move stops to break even. Okay, so what we can say here, if we were playing long from the bottom of the channel, as you move up to the middle of the channel, we will take 50% profits on the long, okay, in case you hit the middle and find resistance and come back down. Okay, as you hit the midpoint of the channel, move your stop up to break even. Okay, so then you're obviously taking 50% on the middle of the channel, and you move your stop loss up to break even. E.g., if you do fall down from that midpoint resistance, you only end in profits. Okay, what do I personally like to do is, if we take 50% at the midpoint of the channel, if price breaks above the midpoint and retests it, and there is a significant higher low on the move up, I would compound the 50%. Well, actually, I wouldn't do 50%. If I've taken 50% profits, I would compound on generally 30%. So I wouldn't put on the whole of it, to be honest. But if I've just taken 50% profits here, I would compound on 30% of my taken profits, just so I don't take everything back, put it back on the trade. I want to keep a little bit in my bank. Okay, so I would compound 30% on and then aim for the middle. Okay, so I've obviously done a whole stream on compounding, so I hope that you thoroughly understand that technique. But obviously this is a 50% take profit. Okay, then you would compound on 30%. Well, obviously you don't have to do the same figures as me, but I generally do 30%. Okay, And that is just because, you know, if you take 50%, you don't generally want to put it all straight back on into the trade. You don't want to keep a little bit of profits for, you know, for yourself. So yeah, that's how I would trade it anyway. And then you compound on, aiming for the top of the channel. Okay. And so this midpoint is a very key point in day trading, okay, where you look to take profit or compound if you get the closes above. And you will generally see very often moves like this, for example. You know, this is why we take profits, because you will see moves to the down, coming back up to the midpoint, okay, coming back up to that midpoint, and instead of breaking through, holding and moving back up to the top, you will see this hitting the midpoint and it getting a rejection to the bottom. Okay, so that's why we basically take the profits here, because we can then add on at the bottom. Okay, so although you've just seen a partial rise and you've hit the resistance of the midpoint, you still look to take a long when it comes down to the bottom again. Okay, so you have just locked in 50% of your trade here. Okay, and then as it comes back down, you could either compound because your stop loss is still set, okay, or just let it run, okay, and then compound in the middle. So there's two ways that you could kind of be looking at that. But generally speaking, I would, if I took 50% at the midpoint of the channel and it came back down, back to the bottom of the channel, of the 50% that I've taken, I would only add on about 5 to 10%, okay, just because I view that as a partial rise. And although you will see many times it does continue back up, I just don't want to add on the whole of the profits that I've just taken. I am a little bit of a, you know, take profit conservative trader like that. But yeah, that's the way I do it anyway. So next I want to explain big term swing trading channels. Okay, so this is very different than a day trading channel. So what I would class as a day trading channel is something on the 15-minute chart, or the 1 hour to 15-minute chart or less, obviously, is a day trading channel. And that's where you'll be looking to take, you know, maybe 3-4 trades in the course of a day while trading a range. Okay, and obviously the opposite to this is a swing trade channel or a position channel, where you would enter a position, okay, and you would be holding that for, you know, a day, a week, a month, potentially, depending on how big this channel is. You are going to see channels that will form over years. Okay, so there are channels that have you know, being year-long channels, and you are literally range bound for years. Okay, so obviously in that scenario you're holding trades a long time. I don't like to trade like that. I'm not a trader that likes to trade holding for so long. I prefer the, you know, a bit of the action, but you know, you do see channels that literally go on that long. So all I want to say is this: if you're looking at a swing trading channel where it is very large, you would not be looking at the midpoint as a take profit. Okay, so day trading, you long the bottom, take profit the middle, close the top, short the top, take profit middle, close the bottom. Okay, in a long-term channel, the midpoint is definitely going to be your target. So if you are looking at, say, let's just say, you know, something that's related to crypto, you know, you're going to see like a channel that goes on for a week. Okay, so if you're in like a week of a channel, then your midpoint is going to be close the trades, because that's a significant resistance line. So let's say you had seen your touch, okay, you would have a target. You could potentially, you know, think you're going back up to the top of the range, but 100% the midpoint of the channel, you would be looking to close out of that trade, okay, because in such a large range, okay, that's going over a long period of time, you're going to see something like this, reactions, and at least drops down, okay, and then you could even, you know, really, I would wait for it to reclaim, and then once it's reclaimed, add back in, and you know, that's when you compound back on and aim for the top of the range. I just really want to stress that in a swing trader's channel, the midpoint has to be not just to take profit. You would generally be taking either a high percentage or very aggressive on your trailed stop losses. So let's say we trailed our stops to obviously break even, to profits, I would be very aggressively trading my stop loss on a swing trade channel. So I do trade swing trade channels, but I would be very aggressive at the midpoint, not just you know, if this is, you know, a course of a period of a week or two, then when it gets to the midpoint, I wouldn't just hold everything, say, thinking we're going straight to the top. Okay, it's yeah, on a big channel, which we have obviously on Bitcoin at the moment. So Bitcoin is in a sideways range. The midpoint is a very, very, very crucial part of the channel. Okay, so if, for an example, if I load up Bitcoin here, so if we load up Bitcoin here, and let me just load up a plain chart just for an example here. Yeah, so this was our this was our channel that obviously gave our breakup all the way up here. So here we were just in the channel, we broke out, we back tested, and look at the reaction. But that isn't what I wanted to show you in this example. What I wanted to show you was on the candles. I wanted to go to the 3-day here. I want to temporarily delete this and just give you an example of a sideways range that we are literally in here on Bitcoin. So what we can do is take the top of our range down to our range low. Okay. So this is a sideways range, isn't it, on Bitcoin? You can see here how I've just done this. I have got a slide on this later as well, by the way, but I took it here from the candle close. Why the candle close and not the top of the wick? Because the candle close here has obviously seen a rejection, and a second rejection. If we take this from the top of the wick, we can say it has no other relevance because it hasn't been touched at all. You do want to see the top and bottom of the channels when it's a defined range like this is to have more than one touch, okay? Because you know, if we take this, extend it to the top, it's seen the top, okay, but it hasn't then seen any consecutive, you know, follow-on touches. Whereas taking it from the candle close in this instance does see a rejection, and then here obviously a rejection, okay. Then on the flip side though, it's taken from the low here, okay, which is a resistance. What did the resistance do? Resistance flipped to support and support. So the bottom of the range is viewed as this, because obviously the top we have 1, 2, 3 touches. On the bottom we have a SR flip, 2, 3 touches. Okay, so what then do we also see going on in this range? We did see a partial rise, which is a show of weakness, okay, which was another reasoning of mine why I did believe we were going to touch the bottom of the channel. But in the end, obviously we can see the reaction and we haven't touched it. Again, this go just shows you that, you know, obviously nothing is 100% perfect, but we did see the partial rise here, and here we saw a partial decline. So this is I would personally just say very, very characteristic of a sideways market. You know, really choppy. Okay, so what could we say in the end? Even this is just forming, potentially it's coming less of a range sideways and performing more of a contracting price action. So maybe we didn't get the touches here because instead of going from high to low, it's sort of, you know, contracting rather than fully range bound. But I just wanted to bring you this to your attention, because if you are shorting here, you are taking profits or closing out your trade at the middle. Okay, so again here, although it would have worked out perfectly, you would look to close out of the trade here. Okay, and then, you know, on the lower term time frames, this is the 3-day, you're going to see retests, and then that's your opportunity to trade it to the bottom. And again here, longing the bottom. Okay, so this is a perfect example. Long the bottom and you close out at the midpoint. Okay, so if you had long the bottom and aimed for the top, you obviously would have never got your trade, would you? So you long the bottom, close out at the midpoint, and again long the bottom, close out at the midpoint. Okay, so that's just, you know, on a big range like this is on Bitcoin, you don't buy the bottom and think you're going to go back up to 13k. It is literally from bottom to midpoint, and then you would go compounding from there. Okay, so I hope that has explained that, and I want to get rid of that a second and go back to here. Okay, cool. So yeah, that's what I wanted to explain there. Okay, moving on. Okay, so this is kind of already hinted at, but yeah, you do see channels do not have to be sideways. Okay, so this is a this is a question that I've been asked a lot of. You know, I trade, you know, give a lot of examples of the sideways channels, but yes, channels are regularly also formed on bull or bear flags, okay, where price obviously consolidates within an upward or downward sloping channel, depending on whether it's a bull or a bear flag. And then generally, as I've gone through them before, your targets would be a 382, okay, or in this example a bear flag, or in the form of a parallel channel. Okay, so your upward sloping parallel channels or downward sloping parallel channels are absolutely fine. Okay, there, you know, you see upwards and downward sloping or sideways. Okay, so any of the three are absolutely fine to trade from. And again, if you are coming from the up to downside, you would favor it to continue to break down, okay, rather than thinking it's going to reverse and break up. You generally would follow the trend. Okay, so I hope that one makes sense as well. Again, if there's any questions, I will go through all questions at the end. Okay, I will take all questions at the end, because I might have possibly missed something. But you have to remember there is also 3 parts to this. But if I've missed something that's from this today, then I'll cover all questions at the end. So yeah, parallel channels. So this is like now going on to start a parallel channel. Okay, you need 3 points. Okay, so you only need 3 points to form a parallel channel. Okay, so you need a bottom, you need a high, and you need a higher low. Or if you flip that, you need a low or a high, a low, and a lower high. Okay, so at the very basic, you need 3 points to form a channel. Okay, 3 points to a channel. Okay, obviously this contradicts what I said to the first point of where you need 4 touches. 4 touches is an already formed parallel channel. Once you've seen 1, 2, 3, 4, you already have your channel, okay, and that's where you would continue to trade it. But obviously, as a trader, we like to get in there early, or personally, I like to get in there early. So I will trade it once we have 3 points of the parallel channels, okay? So 1, 2, 3. How do you do this, okay? What you do, you would want to see the third start moving up, because obviously if this continued to just go down and down and down, you know, you're going to have to keep adjusting this. So you do want to see the first, the second, and the third touch is going to need to have a form of a reaction, okay? Once you've seen like this, lower wick, lower wick, lower wick, green candle, that for me would be enough to speculate that this is support holding and put on a parallel channel. Okay, so it's not just like randomly on the first green candle here I'd suddenly put on a parallel channel. I would want to see some form of its holding, otherwise it's just pointless in putting it on, really, isn't it? And then so 1, 2, the third touch, you want to see some form of either support, or if it's a downward sloping resistance holding. And yeah, basically though, all you need is the 1, 2, 3. And then how do you look for targets using this? Okay, so very, very simply, once you've seen touch point 1, touch point 2, touch point 3, put on your parallel channel, okay, and very simply take profit the middle, well, depending on time frame, okay, but you know, going back to what I said earlier, if you're day trading, then we're taking profits in the middle. Target is the top of the channel, okay, so target is the top, touch, 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 take profit middle, close out top, okay. And then this is obviously the results of bottom, top. We come to the bottom there, we hit the take profit 1, and you see here it come back down by a wick. And then the take profit 2 was again a touch of the top of the channel, and you ended up coming back down again to the midpoint. And this was, by the way, a live one of an example. And if you can remember very, very nicely, this was seconds before the breakdown, all the way down to, in the end, going down to around 9,300. And very nicely, I had that short open because I was day trading this, and I actually was in a short from the top here. Well, because of the speed of the wick, I got in on the short at the midpoint. So this is, again, a little bit different. But I was obviously short from 10,240. And then, you know, minutes later, we ended dropping down to 9,500. And that was from day trading. I was only in that short because of day trading the parallel channel. So that's sometimes when you get your day trades suddenly going into a swing trade. Yeah, that was I was obviously never expecting it to suddenly drop down to 9.5, but yeah, it did. So that was obviously very nice. But it all stemmed from literally day trading this parallel channel, okay? And that was from high to low. High, expecting it to come back down to low, and what did it do? It fell over and went straight to 9k. So for me, that was very, very nice surprise. But it all stemmed from literally trading this parallel, okay? Okay, so moving on to the next slide, okay, where we're going to go over some stop losses, okay? So this is obviously just a plain sideways range, okay? So plain sideways range. Again, this wasn't another live one that I was just doing examples on. And what we can say is here, okay, so when you look at the plain chart, I guess the first question would be, can you see or can you tell where you would be placing stop losses on this sideways channel here? Because this stop loss, unfortunately, I cannot just say stop loss 1% or stop loss 2%, because every single parallel channel is different. It's impossible to give a X stop loss. This is always going to be the stop loss limit, okay? Another point that I would add to this, there's never going to be a set stop loss. You have to use market structure. So you're going to have to go off previous levels, okay? Because every channel is going to be different. And secondly, I will take trades in a parallel channel myself. Not necessarily I'm recommending this, but I will take trades in a parallel channel which have a less than 2-to-1 risk to reward. So I will regularly take trades inside of a parallel channel once it's range bound, where the risk to reward is sometimes about 1.5, 1.4 to, so generally speaking, it's funny, I teach a lot saying never ever take a trade if it's less than 2 to 1 risk to reward, because probabilities wise you always want it in your favor. But personally, I will take trades which are about 1.5, 1.4 to 1 inside of a parallel channel. Okay, I just wanted to just highlight that I would take trades with a less than 2 to 1 inside of a channel. Okay, but I would really recommend you experiment with this yourself to see how good you are at trading them. But personally, I'll take a trade that's less than 2 to 1. And again, stop loss placement is going to have to be going off of market structure. So using old highs here or old lows for a stop loss placement. And so this is what we can see traded. Okay, from where we went low to high. So here, obviously to the high to the low. And I've just added on a few examples, or we could be short in the higher range, stop loss above the highs of this move, okay, aiming down to the bottom of the range. Here, a long, stop loss below the lows, aiming up to the higher range, which obviously hits in the end here, hitting the higher range, stops above the high, aiming down to the lower the range. And this did break to the downside. I remember this one. It was after the following very large move to the upside. We formed a bit of a consolidation, and it fell down. It did fall down in the end. So yeah, this was just a random example that I found here of ways that it's not always an obvious stop loss placement, so you're going to have to be looking at relevant points on the chart. I will load up some other examples that we can go through. Okay, so again here, this is an upward sloping channel, so off the bat one could say it's not the most obvious channel to be trading here. Okay, but what we can say is from low of the channel, okay, to high. So what are you looking for at the bottom of a channel? You're looking obviously for a long, the top a short, the bottom a long, the top a short, the bottom a long. And then what do we see here? This is a move up, but a deviation from the range. So what can we do? We can either long a back test or wait for it to close back inside of the range. Okay, so upon closing back inside of the range, we can say that this was a deviation from the range, or another word for a deviation is obviously just a fake out, so a little fake out from the range before you come back inside. Okay, so that's obviously could be viewed as a deviation. Again, we would have to be looking at volume here. Was this break on high volume? If it was a break on high volume, then we would look to long the retest. Okay, so we would look to long the retest if it was a break on high volume. But for the sake of the example, we're just going to say it was low volume. And we come back into the range where we shorted to the bottom of the range. And then what happened here? You went flying straight through. Ooh, you went flying straight through it, just like you went flying straight here. We'll say this was on high volume. For the sake of the example, we come down on high volume. So that is then a break of the range. So what would you expect to do? You'd want to see a back test of that support flip to resistance. So price closed outside of the channel range equals support has flipped to resistance. You would look to then short this range, where you would have your stop loss at a sensible placement back within the channel. E.g., you could use the midpoint of this section because that would signify a horizontal level, or you could add a fib and actually from high to low and see if there's a confluence here of maybe a 382 or a 0.5 fib, which confluence with the price action here. Okay, but basically once you've closed outside, especially if it's on high volume, then you would look to short a retest if it comes. You don't always get the retests obviously, but if you do get the retests like here, you would be looking to short stop loss, and in the end you get a secondary retest here and the move does continue down. So yeah, that's another example here. So moving on. Oh yeah, so this is from today's channel. So I think I will cover today's channel, because what I can do from today's parallel channel is go through a lot of really, well, basically just tell you exactly how it was traded today. So let's load up this channel. Okay, so firstly I will go through how I did trade this. Actually, firstly, before I say how I traded it, I will just go through how one would look to trade it, and then I will say how I traded it as well. Okay, and then I will take some questions because it looks like there's a lot here. Sorry. But basically, let's first go through this. Let's ignore the Elliott wave count a second. Just ignore anything to do with 8 waves here. Just focus. Let's just delete it. Just focus on the channel. Okay. So what do? We formed a high. Very, very nice confluence that this high did form on the monthly. Okay. So we formed that high exactly on the monthly level, which is just perfect. But we obviously went here to high, to low, to high. So what did we have at that point? We had going back to this, we had our 3 touches, didn't we? Okay, so we then had our high, our low, and our high. What was really nice about this is, well, I don't want to say how I traded it first. I want to just go through. So we had a high, a low, and a high. So what would we do at this point? We would have obviously nothing, and we have to imagine that we are just here. Okay, so then what do? We load up our channel, parallel channel, okay, which is also located on the left here, parallel channel. We take it from our high point, put on your magnet, high point, extend it along these highs, extend it along those highs, and your third touch is obviously going to be at the low here, okay, the low, and that's all you need at that point, isn't it? Your high, your low, your lower high. That is now the start of your parallel channel. So what are you doing here? You are looking to short. This was also having confluence, okay, on the lower term time frames. We had this box of resistance, and it also was combining with about a 786, okay. So you can see here, that you had confluence, 786 Fibonacci, monthly resistance. This for me was the number one, the monthly resistance here, the 786 Fibonacci, which I'll just put back in there, okay, 786 Fibonacci, and this horizontal area of resistance too. So that was enough to give us our parallel channel, and if you were in the champions, you know that we were shorting this. Well, I was at least. And then people followed, and then we obviously then have our 3 touch points. So what are we doing? We are now shorting this, okay, short, and it was perfect. We're honest, it was perfect. What does it do? It went from the top of the channel down to the bottom of the channel, and then from the bottom of the channel, you do not get your exact touch on the top here, okay. How could one see that it was not getting a touch? Here we can say that there was a horizontal resistance, and obviously price at this point touched it, so we did get a partial decline, partial rise. But at the end, you go from the bottom here, you get to the midpoint slightly, see a pullback, so you're getting a bit of bullish market structure. You come up to the top here, okay, you do not quite hit the top of the parallel channel. So at this point, if you had longed here, taken profit here, compounded here, when you see it's not reaching the top, you wouldn't close out your trade. Don't get me wrong, you wouldn't be looking to really close your long at this point, because you would be waiting for a move up, okay, to the top. But once you come back down to the midpoint, that would then be your signal to obviously then close out the trade. Because if you are long from the bottom aiming for the top, but you see, how can you see a partial rise is happening when you do not hit the top and you come back down to the midpoint? So at that point, you would be expecting a partial rise and aiming for the bottom of the channel again, okay, and I'll explain how I traded this in a minute. And then in the end, you see bounces from midpoint, bit of a show going on here. Doesn't know what it's doing. Just seeing long lower wicks. Price gets back up again. You see bounce, 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 and then down to the bottom of the channel, okay, where we obviously can see support. So if we were here short, we took a long, we took profits, we got out of the long, we saw a partial rise. On a lower term time frame, you potentially see a loss of the midpoints, and then you come back down to the bottom of the channel. What do you do at the bottom of the channel? You take a long from the bottom of the channel, and then you come up to the top of the channel, okay. So that would be a long, take profits. You actually move rapidly through this but you would have longed here, taken profits here, closed out here, and then what do you do here? What do you see is a close through the channel, okay, close through the channel, and let's just see the volume right now. Okay, so what we can say is this was an increase in volume. So the move up, excluding this high bear volume, but the move up, what this break was on an increase in volume. So you look to long the retests, okay, so you would then look to long this retest, which kind of what we can say is you might not always get a perfect retest, but that's a pretty big flip right there. So if we come down to the 3 minute, that's pretty perfect, isn't it? Where you could, for an aggressive long, because what do you have? Psychological 600. You also have this SR flip, okay. Obviously if you're waiting, you'd be looking at around $40 lower of around 10,560. Okay, so that's obviously a technical way that you would look to then get on a long on this, where you could say this is now a break of the range. Going back to the start of the video, how could we get a one-to-one of this range from the bottom of it to the top, and then you right click and you clone, take that then to the top of the range, and look at that. Where's your target? Monthly. Okay, so that would be a one-to-one, a pretty perfect one-to-one coming up basically for a double top. Okay, so that's where you could see a double top projection, isn't it? Okay, just bear that in mind, or you might just see something like this and then consolidate here and break through. But nevertheless, a one-to-one of the range, just taken, forgetting about everything else, would be a double top, and that would just kind of be perfect. But yeah, that's a perfect way of an example, of literally a live example now of how to change the range. I will explain now how I personally traded this range, because I didn't trade it as perfect as the example, but still profitable, so I can't complain. So the way that I traded this was I got very, very, very lovely entry, going back to the scalping strategy. Well, on the 5-minute here, we had our close outside of the Bollinger Bands, and it was on the monthly level, and this was obviously highlighted yesterday in the chat for everybody. We come up to the monthly, we closed outside of the Bollinger Band, that was obviously the short, and then we also had people learning and also taking the same trade. Okay, and that was obviously the entry at 10,762. The high here, literally couldn't have got a more perfect short. But then how I went on to trade this, okay, was from the high. Okay, at this point I didn't know we were going to form a channel, obviously, because it was just a high. But going from the high to the low, I then compounded the short at this point. Because what did I have at this point? I had a reason to compound a short, e.g. add into my short and increase my short position size. Okay, so we obviously went high, low, compound, so add into a short. Okay, and this for me was just before I went to bed. And then what would you do in this scenario? So you're in a short, you've seen a low, you've seen a nice reaction from the low, but you are expecting a lower high because of the resistance horizontally. Because for me, the major factor, this, which I'll explain in a shortly, this monthly level is really, really important, and you're going to see why in a bit, but this is a very important high. So because of that, we're just going to be expecting a rejection, if we're totally honest, as as we were explaining. I can't find it in the chat right now, but we were expecting a rejection here. But guess what? It was a short added to here, and my take profit was 10,500. Okay, so take profit, and obviously this happened while I was dead asleep at 1 a.m. here, but nevertheless I woke up to having taken profits on my short, so that was very nice. We then went from high to low to high. I obviously had take profits during the night and woke up around here, so I was waking up around 7 a.m. ish, around this point. Okay, then I could see clearly that we had the parallel channel going on. Okay, we clearly had our parallel at this point, from high to low to high to low. Very, very confident that we were in this channel. Okay, what I done, okay, was I compounded, okay, my short, and this, well, just before this high, I actually got into the entry around 10,540, so it was a little bit lower. So it wasn't a perfect high, but I compounded my short lower. Okay, so then I'd obviously taken another short, taken profits, taken another short. Okay, and then very nicely we did see a move to the bottom of the channel, where here on the hourly of the channel I did take another series of profits. Okay, unfortunately I did not long the bottom of this channel, and that's because I was foreseeing this come down to this order block. I missed my long entry, and closing out the short was to be this level right here, and I missed it by $20, and that's just a little bit of a bad decision. But I was looking for a one-to-one extension of this and the confluence, and I did miss that, so that was a little bit of an oversight on my part. But nevertheless, what I had done is my take profits. I'd obviously taken profits at the hourly, so that was okay anyway, and a percentage of take profits were moved to break even, and then just a take profit. And then as the pump moved up here, what I done was I actually shorted the top of this channel. Okay, so I did short the top of the channel, and it looks a little bit better on here from the picture that I uploaded actually. Where is it? Here I did short the top of this parallel channel, and what we can say is it did break up, retested, and broke up again. I still am in the short, by the way. So I am still in this short, and that's because I want my invalidation above the high. But I then also entered into a long. Okay, this is obviously on a separate account. I did long the back test of the channel. Okay, and so although I am in a short, that's just because of the monthly, which I'm going to cover in a sec. But so I did long also the back test of this channel. Okay, and we obviously had our 15-minute close outside, and I did tell the group that was for, well, I entered into a long. You can do what you want, but I entered into a long on this back test. Okay, obviously the target being around this monthly region on the very short term. Okay, and then we obviously have to see, do we break up from there? Okay, but the short term target is obviously going to be that double top. So yeah, that's a night, just perfectly. That was what all I was trading from today, and although I didn't maximize profits of the long, I did make a very, very profitable short from this. So that was obviously nice. Original short, compounded short, okay, obviously I had already taken profits here, did take profits here, and then got into a long on the break. So that overall is a very successful, really nice example of trading this parallel channel. Okay, so going to take a few questions right now. Let me just go back through all these. Okay. You mentioned of looking for 3 pivot points to draw your channel. Yes. I don't. So yes, I would say you need 1, 2, 3 points. Okay. Obviously, if you just have 2, if you do just have 2, I would say it's impossible to know that you're going to be ranging at that point unless you are envisaging a sideways channel and you're just envisaging sideways. This is what I was going to cover next week, of going through a 2-point touch. So I've got that in a lot of detail of a 2-point touch predicting a sideways channel. So I do have information on a 2-point touch, but for the sake of today, yeah, you can do 2-point touches, but it's a little bit more advanced of thinking that you're going to go sideways. It's a lot easier to wait for a 3rd touch, and then you got touch 1, touch 2, touch 3, and obviously you want to see some form of rejection or a reason why you would reject at this point. And what we can say is we did have our reason. Okay, we had our horizontals, we had our monthly above, okay, and we had our 786, and obviously in this scenario, okay, what the short was like this. Okay, stops above the high. You would have gone touch point 1, extend this on from touch point 2 down to touch point 3, take profits, although I wasn't closed out the trade, take profits nevertheless. You have about 3 to 1, and that stops above the key high. So again, using market structure, obviously a very tight stop loss would have been above this high, which gives you an 8.1, but that wasn't my stop loss. Mine was above the highs. Okay, just giving myself a bit of room on the trade. Just while I'm on the topic, I see a lot of people always wanting to give themselves such tight stop losses, and I do think it's a bad idea to always want to give yourself such tight stop losses, because you need to give your setups room to breathe. By having tight stop losses, you are going to find yourself getting stopped out and actually getting the move right, because you could have seen something like this if you had such a tight stop loss above this high. There's nothing stopping you at this point, just coming up again to that monthly and getting rejected. So there's no need to have such tight stop losses. You do want to give your setup a room to breathe. Okay, and that's just a little bit of off topic. Tight stop losses. You don't want to have a tight stop loss just to have a tight stop loss. You need to have a stop loss that makes sense. Okay, just while I'm speaking about that. Cool. So moving on. Positive parallel channels, the tool is called. So yeah, this tool is literally just called parallel channel, and it's located under the left here. Okay, trendline tools, parallel channel. What tool on TradingView do you lose? Oh yeah, so again, same question, but yeah, that's the parallel channel here. Okay, so you just get it under trendline tools, parallel channel. Okay. So if this was a big fake out and we get back into the channel, can we expect a big move to the downside? If so, why is that so? So what we would say is, if this is a fake out at this point of the upside of this channel, so if we do see a deviation from the channel, what would we want to do to say we're looking to short this? Okay, so at this point, it's obviously bullish. Okay, so it's looking decent at this point. But if this turns around in the coming hours, okay, how can we be confident to get on a short back inside this? We would want to see a deviation and a close back below the low, and really the retest like this, a retest and then coming back down. Okay, then you are obviously coming into low, low, lower low, lower high, lower low, lower high, retest, and you would short this down to the bottom. Okay, so again, just because you deviate from the upside, you would still only expect, you wouldn't expect anything less. And it's again like removing bias from the chart. Okay, so although one would say if this is a deviation, we want to be targeting lower levels, so I would always just target the bottom of the channel again, still taking profits even if it's a deviation, still take profits on the middle, aim down for the low. So I would take it the same setup anytime. But yeah, this could obviously be potentially a deviation. If that's true, then I'll get stopped out the long. But yeah, this is looking, the reason why it's looking okay is just because you did have this increase here in volume. Obviously, if this was a break and the volume had not increased, then we would say a very high likelihood it's a deviation. A very high likelihood it's a deviation. But because you did see here an increase and an increase, okay, on the move up, it's less likely to be a deviation. Okay, but we have to remember, I'm going to cover this monthly because for me it's critical. That's why I'm not closing out on my shorts, if I'm honest. Like, generally speaking, I would have always taken this trade when you see like the confluence of a reason of a long down here, when you see that it was an hourly level, it was the bottom of the channel, it was the 200 exponential moving average. Obviously I took profits here, but I did not close out of my short, and that's because of this important level that sits above us. But yeah, if this is a deviation, then we would want to just basically see something like this come back down below and do that, and then that you would definitely be shorting this to here. Okay, or if you're already in a short, compounding it. So I am as well in a short. So I would compound here, back down to the lows. Okay, so I hope that makes sense as well. So next question. So the 786 is a strong rejection point in general. Generally speaking, you'd want to see the 6.5 hold. So what did we have yesterday? We did have, when we were going from low to high at this point, we had the 6.5, and from high to low we had the 6.5. What can we say is it did hold the 786 Fibonacci. If I just remove this one just to make it clear. So although we would say, what we would say is the 6.5, we would personally, you know, that would be our number one scenario if this holds as resistance, but there would be no bullish scenario of it just holding the 786. Also, when we come down here, okay, what we can see is the top of this wick obviously comes in at well, between the 786, 886, candle closes of the lows are coming in 886. I was just viewing all of this as resistance, okay? Really, like, we could say all of this, okay, is resistance up to that wick, because this was the consolidation that led to the high for a massive, well, a drop. It's just the relevance of this monthly level, okay? It's just when you, it's then, we're obviously day trading a parallel channel, but looking then at the grand scheme of things as a whole, we can just say that this is an important level, okay? And I will cover that shortly. But yeah, this was obviously just a point from a horizontal point, and the fact that it was a major level above, and the fact that this had obviously moved up on bearish divergences, just led me into wanting to take a short. Okay, as you all know, I was already in the short from here, and I made it very clear to everybody in the comments when somebody said, is this a good setup, shorting resistance, stop loss above the highs? I very clearly said, yes, that is a good setup, stop loss above the highs. Okay, and that's hence why I took the trade as well, because it was a very valid setup. And then obviously that led us to the low of a take profits, okay, and then you obviously get an opportunity for a compound, take profits, and then the rest is history, you know, above. Okay, so moving on to the next question. How often does parallel channels play out in charts, and what time frame do you find them more often? So you could, so this is, for example, you're going to see them on, probably will see them on quite a lot. I like to trade 15-minute channels, so this is obviously our 15-minute parallel channel. Unfortunately, on these charts I delete everything, because I do also lessons on these charts all the time, so I'm always deleting stuff. But yeah, generally speaking, you never want to delete a channel once it's gone. And on my personal trading view, I would never delete a level once I've already had it rotate, and that's because a level once broken is always still relevant. But basically, to give you an answer, you will see channels across all time frames. So you won't necessarily find them more on one time frame than you will on another time frame. All I would say is, yeah, you will find them on all time frames. I would say maybe you will find them more likely on the 15-minute, but just because in the day you do see a lot of things like this, don't you? So break up, channel, break up. Okay, and this is obviously your little consolidation patterns. Move up, and you're getting like bull flags, etc. So you do see it a lot on the smaller term time frames, and if you like to day trade, you're just always looking for that move up and then the parallel channel, and then continuation, or move down, bear flag, continuation. So you do see a lot of channels that form after big moves, or moves up or down, or then generally speaking on obviously on the higher term time frames. Where you could start to see, obviously this was starting off as a really nice parallel, but it does look to be forming more of a descending triangle than a perfect sideways channel anymore. But yeah, to answer the question, how often do the parallel channels play out? Okay, to give you an answer to that, I personally absolutely love to trade them, and I find they are very, very, very successful trading tools. And what I love about the group is that so many people are also finding channels themselves, and sometimes they will find a channel that I don't even find, so that's pretty nice. But yeah, the channels, you just have to have a little bit of an eye for them. Okay, like this channel, maybe not everybody sees straight away, but then once it's drawn out, it becomes like blatantly clear, doesn't it? Like it's just, yeah, getting a little bit of an eye for like seeing channels. For instance, here, could we say that there was a channel? Okay, we can take it from, yeah, so this is obviously you had a move up, and in the end it consolidates as a bull flag, but because you take the high, yeah, so this is a little bit of a, okay, so there was slightly here where we can say if we take from this close to the bottom here, so then what is this to the upside? Deviation back inside, deviation back inside, up to the top, rejection back to midpoint. Okay, maybe on a lower term time frame we back test that as well. I don't know, I can't remember. Okay, so you don't get a perfect back test before you take off, but what you do get is a touch back to this hourly, and then okay, so on the low term time frame you did see a break, retest, and then obviously great continuation. But yeah, it's just, so you do see them a lot on all time frames, but I like to see them really after a big move to the upside. Okay, and then you will look for a flag, or just generally when things are ranging sideways. So this was a channel that I was trading as well, isn't it? So this is another example of a channel I was trading, and this was when it was at the bottom. Okay, and this was one that looked so like a bull flag. And as I said at the time, it was a little bit too textbook, but this is the one obviously when we were looking at it a bit like this. In the end it became really choppy, but this was obviously our upward sloping one where we went from high to low to high to low to high to low. I would have to adjust this slightly, but we did have this bottom one, which obviously, and this is the example where you have, this was like a textbook flag, and then in the end it just obviously broke up. Okay, so you don't, like I said at the start, you look at it 60-40 to a breakdown, but again it's not 100% you're going to break down just because it's from the downside. But on this one, this is the one actually that was from that line chart. So on that line chart example, can't find it now, but yeah, that was the line chart here of that obviously broke out, retested, and went. Stop loss. My engine last week. Yeah, exactly. Yeah, so Dell got very unlucky with Engine Coin. He gave himself a tight stop loss and lost. Obviously, he was trading the tether pair. I don't trade that, but lost by 0.0025 tether. Yeah, but volume doesn't always increase when it goes up. Generally speaking, so let's say that we have our channel. So we're trading a sideways channel, okay, and we have a move, and we start ranging. Okay, we start ranging inside of a channel. When we break this channel finally, what you want to see is that break, and as it breaks, obviously if our volume is like this, okay, as it breaks, on that break you want to see that increase in volume. Okay, so you do want to see an increase in volume. Then what you could do, if you're at your computer, you could look to market short, or if you're not at your computer, then you obviously want to get in on a retest. Okay, and then as you get that retest, you look to short, make a stop loss, at least a 1-to-1, but look for some form of market structure and aim down for a target. But yeah, you do want to see that increase in volume. basically on the move out. Okay, it is quite an important metric of a channel. You do want to look at the volume. Okay, it's not a 100% requirement, but it's very, very nice if you break out of a channel with an increase in volume. Like this, in my opinion, was a nice break of this parallel channel because you did see that increase in volume. So if I go back to the time frame that we were on, it was just nice to see that break from this channel here. When it broke up on increasing volume, you're more likely to expect this to be bullish and break up. Okay, so going back to this example, you know, when you see this increase, you would look to, if you were not long anyway, you would look to buy either an SR flip. Here you might not get the potential of this backtest, maybe, and that's just because at this moment in time you would say, okay, that's very nice. Okay, although it's not major volume, okay, it's not major volume, we know that, but it is nevertheless a long, more. Okay, where's the highest here on the whole move up? The highest volume comes on the break. Okay, so that's volume backing up, trading this long on a backtest, and I got in here, but yeah. Dan, do you set orders before the move on the channels, or watch price action, see a reaction, then get in? Okay, so really, really good question. Okay, so in the example like this, okay, so I just like this example because it's like a live trading example, isn't it? So it's a nice one where in this example, although it was like a third speculative touch, obviously just got in as price was happening. Here, I would have traded this if I was awake. I guess it's kind of hard because I was asleep. But in this example, you would want to always refer to the higher time frame picture and think what's going on in the larger frame of things. What you could say is, because we're bouncing off of a monthly resistance, okay, one would expect this to come down to at least hourly or monthly support. Okay, so at this point, instead of just placing longs here when you're sat up here, instead of, you know, let's say you enter a $1,000 short, okay, what you can do is enter a $2,000 long. What that does is then as you come down here, you close out your short and go straight away into a long. And I do that sometimes in my trades. I will do that. But I want to see more confluence. So if I'm entering, that's just for the sake of an example, $100 on a short, okay, you can enter a $200 long, okay, then that will take you out of your short straight into a long, okay. But in a scenario like this, an actual real life example, I would want to see that holding a support. I would happily have a take profit set there. I would have a take profit set here 100%, or closing out of the trade. I would happily have a take profit there, okay. But at the end of the day, okay, what I would want to see to long this would want to be a deviation. So here, okay, on the 5 minute, you don't really even close outside of it. So you do just see a long lower wick, then you reclaim a bit of bullish market structure. So yeah, the times when I will preset is when there's a strong confluence at the level. If I have strong confluence at the level, I will preset, okay? But if there is only the parallel channel and not another confluence, I would never just preset there. I would not do that. I want to see something else to back it up. The channel on its own is not enough. So you cannot just trade a channel and just have it like really on its own. You do want to back it up with some other form of technical confluence, okay? Like here when we were backing up with fibs, when I originally entered my short, I was backing up with a monthly and obviously bearish divergences. So it's like you do want to have some other form of you can't just trade purely on it and not have another form of confluence. Really, you do want to see that. But on this, yeah, I would not have a preset long here. Would want to see that it's actually holding. And how can we say that it's holding? Well, if you're trading it in the time, okay, after you saw that long lower wick, that for me would be an entry of a long, okay, looking to get back on a back test. Why? Because it's a long lower wick. You know, use some form of candlestick pattern analysis. Here, what do you have on the long lower wick? You do have a form of support resistance. So, oops, didn't try and do that. Oh, damn it, I've just created just delete that a second. You know, you do have this form of confluence, don't you? So if I was awake trading this, obviously I was asleep, but if I was awake trading that, as soon as I saw that form, long lower wick onto this level, that would be enough for me to want to get into a long on a back test, okay? And then as you all know, it did get a back test and it didn't reach fully target, but you would have nevertheless took the profit, moved stops up, and in the end, you know, looked to have got stopped out or you know, take the trade for however it comes then. But yeah, I wouldn't just preset. I would want to see a reaction if I'm expecting overall downwards movement. Okay, so this is breaking up. This is pretty nice. So let's see if we get a 1-to-1 or we just blast straight through it. Dan, do you set audio? Okay, so I answered that one. Can you do some examples of channels on alts? Thinking of a nice one offhand. Okay, so here was a random one. This is one on Icon that I must have had up. Okay, I'm not actually trading any alts at the moment, like actively. I think the altcoin market in general is really bad. Like 99% of alts, I like Engine Coin, like Phantom. The other alts I'm literally not touching. But here, obviously, this is classed as a very big deviation from the range. So very big deviation from the range here. But what we do end up forming is a low, high, low, high, low, midpoint, drop down. Okay, so I guess we can try and pull some random ones. So let me just load up something random. See here. A lot of them are. So what we could have said is that was a channel. That was a channel holding you down here on Tomo. So what did you do on Tomo here? You come in a downward sloping channel, downward sloping, downward sloping, downward sloping break. And by the way, this is just randomly off the top of my head finding this channel. But you did come up in a downward sloping channel here. What did you do here? You broke out of the channel, back tested it, an extreme move to the upside. This was from today. But what did you do? You banged into the old support, flipped to resistance. Okay, and that's obviously a 17% move. But yeah, it's just like looking for these channels. This is obviously like what's known as a downtrend channel. Let's look at the volume. Okay, so this, look at this. Okay, so this is very, very perfect example. Just let me load up volume only a second. So what can we see here? We see the volume here. You see how it breaks? It breaks on very, very little volume. So at the very least, you would not be looking to long straight away. You're not expecting this to just continue on up. Why? Because you break on nothing. You do break on no volume. Obviously, this coin is dead anyway. Like in terms of volume, it's very, very low. So that's just altcoins in general right now. But here, you do break out, but you would not be looking to long straight away because there's no volume to back it up. So you could wait for the retest, and then obviously you do get the retest of this channel. Okay, again, I would probably be conservative and not enter on the retest. Wait for a bullish market structure, and then what do? High, higher low, higher high, and then people look to long after you've formed that bullish market structure, and in the end, yeah, you get a massive move to the upside. But yeah, this is a nice example of a downward sloping parallel channel with a parallel channel here where you're going down like this, break, retest, big move to the upside. Okay, so that's a random example on Tomo there for you. I will do some more examples. I want to cover Bitcoin basically. I would really like to cover Bitcoin. Let me just see any other questions before I do Bitcoin. You also use the MACD RSI as price action approaches. Yeah, so we can use MACD and histograms, RSI for potential bullish and bearish divergences, because this did have bullish divergences, by the way. So what can we say here? Let me just want to take off these EMAs a second, just temporarily. What we can say is this did come to the bottom of your parallel channel and you did get bullish divergences. Okay, so you did get a series of bullish divergences. So you're hitting the bottom of the channel. Okay, and what do? Price action forms a lower low and RSI is higher low, so that is bullish divergences on the bottom of the channel. Okay, e.g., generally speaking, one would say this is a very good long opportunity. So yeah, you did see, yes. So to answer your question, like this is what you want to see. So, if you start to see bullish divergences at the bottom of the channel, it's just adding more reasoning to look for a long. Okay, so, in hindsight, this would have been a very, very nice long. Obviously, you had confluence of the hourly. I just took profits, and I'm more than happy with that. If I make money in a day, that's very nice. So yeah, here we obviously see the hourly level, we see the bottom of the channel, we see bullish divergences. You just didn't have the volume to back it up. All you could say is this whole channel was on very high bear volume. Okay, and then obviously the reaction that we've seen from that, the back test, a little bit of continuation now, where you could move up stops. Literally, if you'd shorted this and had your stop set, okay, that stop for the long now really would be moved up to here, okay, because if this is to break up from here, price should not be coming back down to here, and if it does, it's more like a deviation. So at this point, stop would be trailed really to here. I haven't done this yet on my account, but yeah, stop. Now I've seen this, I would trail stop loss to this low, okay, or slightly just below it. I don't want to be wicked. I would move my stop loss just below this low. So it's now a very, very small risk on the long, okay. And if you do get a deviation and you come back in, you would take a loss on the long, okay. But at this point, you're talking of what's this, like 0.10%. It would like literally be hardly anything, 0.2%. So yeah, to answer your question, yeah, definitely you can use RSI histogram as extra confluence, and as you can see here, it would have given you a very nice bullish divergences bottom of the channel, also coinciding with an hourly level, which is obviously this hourly here, by the way, just to show you all. That's the hourly level there. Okay, so you had confluences. Do you draw channel and then another channel off of that channel for a trend change, or channels within channels? Yes, we do see channels within channels. Okay, so that is I have got this for next week. I have already planned channels within channels, and I called it channelception. But yes, you do see channels within channels, and that's generally, let's just say you were in, and we have to just pretend here for a second. Let's pretend we're in an overall sideways range, okay? And then within a sideways range, we are seeing more channels, okay? So then you're seeing channels, okay? Within this sideways channel, we start to see more channels. And let's say this in the end starts doing, obviously this is too early, but then we could see this start to form. And then you have channels within the overall channel. So yeah, you do 100% see that, and you do 100% see that, and you see it quite a lot. And it's more, you'll generally see a sideways. The overall channel is generally sideways, and then obviously when you have your overall sideways channel, okay, so let's use this as an example. When you have your overall sideways channel, how do you go from the bottom to the top? You go up inside of another channel. Yeah, so yeah, you do see channels within channels, and this is why I love to trade them, because I personally see them quite a lot, and I just love trading them. So yeah, you do see channels within channels, but I've got more on that next week of like properly that. In a sideways channel, do you still look for 3 points to draw your channels? Generally speaking, I think for the purpose of today, I'm going to say, yeah, you do want to see really on a sideways channel 4 touches. And that's just when you can then have a lot more easier to say that you're in a sideways channel once you've seen 1, 2, 3, 4 like this. Once you've seen 1, 2, 3, 4, once you've seen that, okay, or if you don't class this 4, then once you've seen that, you are very much range bound, and you would continue trading the range until it obviously breaks the range. And that's when you would obviously then, if you were short here, get stopped out at your short, and you'd go into a long at this point to trade a 1-to-1 of that channel, okay? Or the way that I do it wouldn't necessarily be a 1-to-1, but I'd be looking at prior support and resistance lines to see what makes sense, okay? But yeah, on a sideways channel, yes, I would say for now you do want to see 4 touches, really 4 touches on a sideways channel, and it just makes things a lot easier for the purpose of today, because I have got this planned. But yeah, for the sideways channel, you want to see those 4 touches, just as in the first one. You want to see those at least 4 touches. That way you can say it's a confirmed sideways range once you've seen 4 touches, okay? That gives you confirmation. When we're looking at the 3 touches, this is a little bit more advanced, I guess, slightly, but yeah, that once you've seen 3 touches, this is like a speculative, and this also goes off of Elliott waves, if anyone knows this. But when you get Elliott waves, wave 1 to 2 to 3, how do you get target for wave, or I guess it wouldn't be 1, 2, 3, 1, 2, 3, you know, this is just our touch points, but you could be aiming up for a target up here from taking your bottom of 1 to the bottom of 2, okay, top of 1, and then your wave 3 target using this. But yeah, basically 3 touches is the minimum for a channel, okay? And then that's how you get targets for a move up, okay? That's how you would get targets for this move up, once you've got your 3 touches. Cool. If nobody has any more questions, well, I'll start going through my Bitcoin analysis, and then if people do have questions, I can obviously take it as I'm going through this. Cool. So starting off with Bitcoin, I'm going to delete this Elliott wave count because otherwise it's going to get in the way. So you can just review this or pause the screen if you want to see what I've got going on with this count. But basically, I view this starting here with a starting diagonal. Okay, don't place too much emphasis on this count, by the way, because I'm actually trading off of price action more. But this just gave me a very nice perspective of looking at this as our 1, 2, 3, 4, 5 within wave 1. Obviously, 4 retracing below wave 1, starting diagonal. So we got a starting diagonal in the 1, 2, and then within wave 3 here, a 1, 2, 3, 4, 5 within wave 3, coming down for that wave 4, and now potentially into wave 5, which I'm looking for around 11k if this breaks the monthly. But that, for now, is going to be deleted. Okay, because I don't want to focus on that at the moment. So I want to start on the monthly, and I view the reason why I view this level so important. Well, let's just see straight away our monthly straight off the bat. How can we get that monthly that I shorted yesterday? Very simply, monthly. There you go. There's your monthly level, and we're going to see the relevance of this. Where, thinking back, our last monthly level, where did we get rejected? To the tick, wasn't it? So it was literally this monthly from the all-time high was the very high, and now today we had seen our monthly, and then we did get rejected from the very big tick. Okay, so obviously in form of day trading it was a very, very nice short, but this is why the level, in my opinion, is so important. Why even more when we come down to the daily? Look how relevant this level has been in this range. It has been an exact point of really resistance, an exact point of support, an exact point of support. Okay, resistance, 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 an exact point of support, resistance, resistance, resistance. Can we just all confirm that this is a very relevant level? Doesn't mean it has to hit this and totally fall down, no, but we would have expected a reaction of this level because it's a very, very, very relevant level within this range. Okay, now let's add on our sideways parallel channel, and we will notice that the midpoint is going to be a little bit higher. Okay, so our midpoint of this channel comes in at 11,000 basically. Okay, so what we could say, if this was a 1, 2, 3, 4, 5, we're looking for around 11,000. Okay, all I want to say is this is a really pivotal point on this chart. If you do anything like this with a crazy, let me draw, if you see a crazy wick and back down below, then obviously again it's still bearish even if you wick up. If it's a wick, then it's not good. But if you start closing above this, okay, if you start closing above this, then we're looking up for higher targets. But until you see the close, it's resistance. Okay, so then when we come up to the daily, maybe we'll close in the next few minutes. That would be pretty cool. But if we take obviously from this high to this low, we can say the 618 well, 10,833 for the 0.5. The golden pocket coming in around 11,000 to 11,200. Why do we see this as great confluence? Because when we add on this ray from the high up here down to this high, look at the confluence in the box. Wow. What we can say is this is potentially a very nice long target. Okay, when we look at this, we can say, wow, there's a lot of confluence here of a trend line and the 618. Okay, doesn't mean that you have to hit this and go down totally. You could definitely see some form of move above it. Okay, because we're going to see a lot of FOMO probably coming in, which could push you above. Okay, so don't be surprised if you do see it coming through this level, but that's a key level, obviously, isn't it, as a resistance, 0.618 and the downward sloping trend line, so you could undershoot it or overshoot it. I'd be very surprised if it's an exact resistance, just like this. Okay, so just like, let me delete that a second, just like this was, look at this was obviously a fake out, wasn't it? Okay, so this was a deviation from this range, okay, above, but what was very nice was that we had obviously never reached our daily here, and in the end it got a wick, resistance. I think that this was also from the very high, if I remember correctly. It was, wasn't it? Yeah, so it was also the 618 here of the overall at that point when you were trading it like this. Although you had a deviation from your trend line, what did you have holding you down? No closes above the 618. So that's obviously then a wick above, a wick above, wick above, wick above, no closes above the 618, deviation from the range, isn't it? But now this trend line, obviously this 618 is at these highs. But if we take it down, that sits there, take it down, sitting at this box, isn't it? So it does look like price could be very drawn toward this box. Okay, that's something I would just say. It looks, looks like it could be drawn towards it, but until it gets a close above, you have to. Though we could literally be smacking on it right now, till it closes above, it's still resistance. Okay, and it is a really, really relevant level on this chart. And I wouldn't want to see a wick above. I would want to see a close, by the way. But nevertheless, yeah, long target would be here. If you start then closing above it, that would be, so you're looking around 11, so 11,000 exactly to 11.2. If we just take this daily level here, that's coming in at 11,925. So 11,925, but really that 11k as well is going to be relevant. But then what could we say? This overall range is just a sideways channel. And if we're looking at it as a sideways channel, we could say it's not bullish overall until price reclaims this. Okay, so if price gets above the overall channel, oh yes, I very much see 17k, that region of 17k coming pretty fast if price does this and closes above the midpoint. Until that happens, even taking this monthly at the end of the day, we are potentially still range bound until it either breaks. So you could not get very bullish, and I would be very bullish with a break above this range, very bullish, but at the same, I would be very bearish if you break below the range. And that's why, while it's sideways, you have to be taking profits. Okay, you have to be taking profits, whether you are long or whether you are short. Don't hold on to your positions all day long, because if you had shorted anywhere up here, it wouldn't make sense to not be taking profits down here. The same if you long down here, it wouldn't make sense to not be taking profits at these major levels, because at the end of the day, all you're doing is sideways range, and it's not until you break the range to the upside or you break the range to the downside that you get very aggressive in your positions, and maybe then start moving into a trending strategy. So yeah, on Bitcoin overall, all we could say is this is a major level right now, very influence. It has had a very big influence on the market, and until we break that level, it is resistance until broken. So just bear that in mind. I wouldn't get very euphoric at this point as a bull until we can. Well, I wouldn't be euphoric at all until we break the higher range, but overall, I'd just be very careful. Okay, that this is a very big level on the chart, so just bear that in mind. I know that there is something like click for those monthly levels. Dan, love you. Yeah, you were asking about this earlier, so while you're on stream, I can show you. All we want to do is take the ray, okay, click once on the ray, double click on the ray, put it on purple, okay, add in a text of monthly. Okay, spelled out correctly. I just, for the sake, click yes, and then monthly. Then you template that, don't you? And then you have and all I need to do from then is this was now daily. We can say template daily, and there you go. It's as simple as that. Cool. You still accumulating Bitcoin, right? Forgive me if mentioned before, but what macro point would this strat be invalidated and you go for stacking dollar? Okay, so yes, I still am accumulating Bitcoin. So I still am, when I'm trading altcoins, for example, trading them against Bitcoin, although I'm trading Bitcoin alts much less, because I am very bearish on alts, and I'm actually making more money shorting alts than I am longing alts, because shorting alts is literally just a gold mine. But at the end of the day, I'm shorting the alts to gain more Bitcoin. But yeah, I still view this as a bull market. So what do I want to do in a bull market? I want more Bitcoin. This for me is a bull market. Okay, this whole is all of it is a bull market. The fractal that we can say of what happened here. Okay, so let me just explain this. What is this? It's a textbook descending triangle. What do we have here? We actually have a pretty nice descending triangle, don't we? Okay, so are there similarities between this and this? Yes, there absolutely are similarities, but there's one major difference, that this was on the back of a massive, was a bear market, very bearish market structure, down, very bearish. What are we now? We are in bullish market structure. So one has to say that there's a problem, if you're just going from bearish bear market to bullish bull market, you have to look at it breaking up. And in that sense, I am accumulating Bitcoin. So yeah, I am accumulating Bitcoin in the sense of trading alts to Bitcoin because I want more Bitcoin basically. Okay. Does that mean that I'm only going long? No, it doesn't. And you know, I don't want to say I've not ruled out a scenario that we come down to 7k lower market until we break this range. It's neutral. Okay, it's neutral until we break the range. And even if we really broke down to here, I would still view this 7k as a longing opportunity to play it back up. Okay, obviously if it does break down, we obviously here have the 618, so that's for me is still an opportunity to buy, but we might not get that opportunity potentially. Okay, and I am not a bull or a bear really at this inside of the sideways range. I would be neutral, day trading it long and short, long and short. I don't care whether I long or whether I short. I just want to make money. Okay, so I'm not a bull or a bear. I just trade the chart. But overall, if we break patterns up to the upside, you would look more bullishly, and you break it down, then you can look more bearishly. But while you're inside of it, it's just neutral. But overall, yes, I am still accumulating Bitcoin just because I do view this as a bull market, and even if we get a drop down to these levels, it's at the end of the day still a bull market. Obviously it's not really then until you start coming down here, then I would be very speculative and saying that this is potentially a very big fake out to the downside. But it doesn't make sense to really, in my opinion, speculate that. There's no point thinking you're going down to 2k while you're sat at 10k, in my opinion. Cool. Any other questions? Yeah, no worry, Chris. Cool. So does anybody else have any other questions while you've got me, be it on parallel channels today? So there is obviously still a lot of stuff to go through on the channels, so this was just part 1. Okay, and there will be a second part next week. And if I don't fit it all into next week, I'll do it in 3 parts. But hopefully I'll finish it all next week. And this was more of like an introduction to the core basics. And then next week will be more some advanced features of like under overs, etc. So yeah, next week will be a continuation of this for if you do find yourself having more questions. But yeah, if nobody has any other questions, I will go and trade this. In regards to US investors, most will have to trade Coinbase or some flavor. Would you suggest as okay for channels? Yeah, I mean, yeah, you will be able to trade your channels on any time frame. Any exchange. So, for example, if you look at BTC USD on Coinbase, then you're still going to see same channels form and things. Okay, so today, for example, I imagine anyway. I don't obviously trade this exchange, but so it's slightly different where you saw this random wick above. So it's slightly different on this exchange. No, I say that it is different. All Bitcoin's breaking up, by the way. This is pretty exciting. But yeah, I guess on Coinbase you can still trade it. But I would love to go and trade this right now. Yeah, obviously on Coinbase what we can say is it did come down to the 200 exponential moving average. It did get bullish divergences. It did come down more or less to the bottom of the channel. So one can say yes, it is still valid to trade these channels on other exchanges, definitely. Do you find parallel channels on Forex? Yes, 100%. Yeah, you'll find them on Forex. You'll find them on the stock market, whatever space or whatever you're trading, you will see parallel channels. You'll see them across everything. So yeah, what we can see here is Bitcoin is breaking above that monthly level. So Bitcoin is now above the monthly. What you'd want to see is some form of close, some form of volume. Well, yeah, so the volume is very weak at this moment in time. Oh yeah, the volume is very, very weak on that move up. That's not really the type of volume you want to see come in when you break up, really. Yes, that's not great volume. Let's go back onto. I'm looking at blaming Coinbase, aren't I? Okay, so it's a little bit better on Bitcoin. I was going to say that volume was awful, but that's Coinbase for you. So yeah, let's just put this back on. So yeah, in the end, we are seeing a bit of a breakup. The volume is obviously not high though. Bearish divergence. I don't know. Yeah, I'd wait for a close. I would wait for a close, but I'm already in the long. So at this point, I think if you also took that long earlier when we were talking about the break of the channel, At this point, it is just a case of I'd still have my stops at this low, although you could move up to this low. Now it's broken up again, and then if you do see flushes to the downside, you'll get out at break even. Okay, because yeah, I'd want to see a little bit more follow through on this. This is not great. Okay, this could be a fake out essentially, because this is not great volume wise. There's no volume coming in yet, so this is very, very fake out-ish, I would say. So just be really aware if this comes down. This volume is it's really, really low at this moment in time. Yeah. Yeah, so I will have been out of this short. So I moved my stops up just below or just above my entry. So I do want to kind of trade this because at this moment in time I'm out of my short and only in the long. But this for me is looking a little bit bearish, and I would want a short coming back in below. Well, really we could say below this low, and then that is what we would say is a swing failure pattern, isn't it? So if we come up, obviously it's not yet, but if we come back below that low, that's really big swing failure pattern potentially. So I do actually, I'm not in a short right now, I'm only in the long because I would have got stops on that move. But in profits, you have to remember, because I'd already taken profits here, I'd taken profits here, I'd taken profits here. So overall, although I got stopped on the short, the overall short trade was profitable. Okay, so I'm not worried about being stopped out of the short, because that's why we take profits at the end of the day. So, you know, it was still a profitable short, 100%. But yeah, this is not what I'd want to see for follow through. So I would want to short this if we come back down below this low, because that for me would look like a swing failure pattern. No volume on the follow through, no increase in momentum. It's not really what you want to see on a breakout. Okay, you might get a delayed reaction. Okay, you might get a delayed reaction. Maybe on a retest, for example. That's when you can see your delayed reactions. But just to end with, obviously, I said there's the 0.5 being hit. So yeah, I'd wait for the close basically. So the hourly close is still to another 50 minutes. But yeah, if we do end up moving up, then we're looking at the 6.5. But if that continues like this is with no volume, then it looks like you could see a fake out at this point. I'd wait before I entered into. Well, I'm already in a long, so that's like just a nice position to be in, but I wouldn't personally be longing this breakout if I saw this right now. I wouldn't be eager to long, and so this is like a nice advantage, I guess, of being in a long early. I feel no compelling reason to add at this moment in time. Okay, and that's for me a big factor. Okay, so you're seeing a little increase now. So you're seeing a little increase, but yeah, I'm not going to add to this long. I'm not going to add to it. I'm more than happy to stay in this, and if we come back below this low, then I would reopen my short. So a little bit of whip soaring, but this is what happens in sideways ranges. Off you go, brother. Thanks for tonight. We've all learnt so much. Exciting stuff. All hail the chart champions. Thank you so much. Can we still move upwards? Still be strong with low volume, e.g., sellers extremely exhausted. I would say overall, you know, what we have to remember, if this was looking up for a 1, 2, 3, 4, 5, you know, you could end this fifth at any moment in time. If we take a 1 to 1 here as well. Yeah, okay. So yeah, I would just say that this could potentially be the fifth, but we want to see it really move up to here. I would say wait now for a little bit of, you know, there's no need to rush into a trade right now. There's really no need to rush into a trade. You'd either look to get short, I think, if you see a swing failure pattern close back below the lows, or really this low that brought you up to the high. Okay, our important support still 10,300. Our resistance, although broken right now, has not really got any follow through, so that monthly is still going to be relevant in my opinion. Maybe you come down and you back test. So what was it, 10,762? Maybe you back test it, and then obviously if you back test and fall through, that's bad. If you back test it and then the volume comes in, well then you can be looking up for target. But at the moment there's nothing. No volume come in, so I'd be wary of this. I'd want to see the back test of the monthly and then see the volume increase, or if it just comes down for a swing failure pattern, that's bearish. So basically I would just not be taking a trade right now. If I was in zero position, I'd be not taking a trade right now. But going back to the parallel channel, this is what I want to end with, and then I will go when we do look at that parallel. Okay, when we do end with that parallel, we could say all we were looking for is money. and that would have got you your money. Okay, you would have obviously taken your profits. But again, we go off of not necessarily one-to-ones, but how a channel is forming. But the signs were here. So as I mentioned, the signs were here originally that you were going to hit your one-to-one, because that break off the channel, okay, that break off the channel did come in that increase in volume. So that was the sign to be long, okay. And in the end, obviously, you didn't get the proper backtest, but you did backtest that, and then you move up. So you'd be very happy if you're sat in the long right now, where you could either take profits, okay, or trail stop losses. Cool. So yeah, I am going to run now. Dan, you were talking about volume and open interest on the Champions Group. I didn't quite understand all that. I mean, the volume and open interest, how it relates to Bitcoin. I'm going to save that for a whole lesson on open interest. Obviously, I gave you all the open interest rundown, but yeah, the open interest is quite advanced. Too much for me to explain now. So Nelson, yeah, I will explain open interest and volume in more detail, but that will be for another lesson. I run out of time, and that requires a whole lesson in itself. It's quite advanced. But yeah, open interest you can see on BitMEX itself, and it's a way of also working out how many open contracts there are, whether you get divergence between open interest and volume and price. But I will dedicate a whole stream to open interest, because it is another useful metric. Again, this is a metric of something that's not on the chart, but nevertheless very important. Okay. So yeah, I'm going to run now. Thank you everybody so much for tonight's stream. All I would say is go away and practice parallel channels. Go away and practice them. Start drawing them. And then as we come back for part 2, which is next week, where hopefully today you have the overview, you can now go and practice. And then next week I'll increase your knowledge of part 2 of the parallel channels, and then it will all start to come together. But I do recommend this week you to try and get as much parallel channels as you can, and then maybe you will find some questions that you can then ask in next week's stream too. Thank you for your time. Loved it. Keep us alive. Thank you so much, everybody. Thank you. I'll update you all with this. I think right now it's not looking great, but I'd want to see a back test really of that monthly, and then if it gets follow through with volume. If it does not get follow through on the back test, then looks as if it could form a swing failure, but it's too early to say because we're still above the level. Okay, simple as that. Cool. So thank you everybody. I will catch you next week for part number 2, which is obviously next week going to be the 11th. So we can look forward to that. We'll have to keep our eye on the alt market. And yeah, I'll catch you all next week. Cheers, everybody. Thank you so much, and enjoy trading this move that's happening on Bitcoin. Thank you so much, and I'll catch you then. Cheers. Good night. Bye.